All right. So again, with the pandemic and with the different funding sources out there, has brought all kinds of other tidbits of information we need to kind of be tracking and be aware of. And so the employee retention credit is one of those that we'll be wanting to know more about, especially any employers that are on the line right now. So sort of fortuitously, I had some folks reach out to me yesterday, just really saying, hey, we want to share this information. Truly, that's what we want to do, is just disseminate as best we can so folks are informed and take advantage of as much as they can with the funds they received during the pandemic funding. So today we have Krista Calkins, who is the Sales and Marketing Operations Manager with Think LLP on the line to talk a little bit more about employee retention credit. So thanks for being here, Krista.
Thank you so much for inviting me, Tara. I know I'm kind of hopping in you guys' meeting. I'm hearing things about supply chain issues, and that's right on par with what the employee retention credit can help with. So I'll just kind of start at the beginning. This is a lot of information, but if you guys have any questions, we can definitely talk about it, or I'll drop my contact information into the chat and you can reach out more specifically. So I'll start with the fact that the employee retention credit came out of the CARES Act legislation back in 2020. We have seen 4 legislation changes in the last 2 years. So there's been a lot of changes about how you qualify, who qualifies, what the amount is that you qualify for. And because of that, we see a lot of confusion from businesses thinking that they may or may not qualify, especially if they looked into it when it first came out in 2020. The original ruling said that if you received a PPP loan, you were not eligible for the employee retention credit. Well, the majority of businesses did receive a PPP loan. In December 27th of 2020, a legislation change revoked that. So you can now receive a PPP loan and the employee retention credit. There are special rules about how you find the qualifying wages. You cannot double dip, but that's something that we can help you look into. There are 2 main ways to qualify for the employee retention credit. The first one is a revenue test, which again, the rules changed from 2020 to 2021. So in 2020, you're looking for any quarter compared to the same quarter in 2019, where you see a 50% revenue decline. But going into 2021, you're only looking for a 20% revenue decline. And again, that's comparing back to 2019. So Congress, basically IRS, determined that 2019 is the last year that business was as usual before the pandemic hit. So we're using 2019 as our base year, regardless of if we're looking at revenue in 2020 or 2021. An additional rule in 2021, which actually works out in most people's favor, is that you can use the previous quarter to qualify you for the existing quarter. So what I mean by that is, if you look at first quarter 2021 compared to first quarter 2019, and you don't see a 20% decline, you can actually look back to fourth quarter 2020 compared to fourth quarter 2019 to look for that 20% decline and qualify you for first quarter of 2021. That being said, if you're looking at first quarter 2021 and you do see a 20% decline, that qualifies you not only for first quarter 2021, but also second quarter of 2021, because you can use first quarter to qualify you for the second quarter. So there's that additional look back ruling and the change in the revenue decline that kind of slipped through most people's radar. So that's one thing to keep in mind. The second test is much more subjective. It's called the partial suspension test. And again, most of the time someone hears partial suspension and they think, I'm an essential business. We didn't shut down, business as usual. We switched over to remote. We were able to still maintain our operations. Partial suspension does not mean that your doors were closed. It means that you had to pivot and change the way that you did business because of governmental regulations. The IRS specifically mentions restrictions on commerce, group meetings, and travel. So if your business had to rely on travel for business development purposes and you were unable to travel or go to trade shows, that would be a potential qualifier. If you require group trainings or continuing education credits for your staff and you are unable to do that, that could potentially qualify you. Some things we see in restaurants are pretty obvious. If there was capacity restrictions or limited to takeout or drive-through only, that's a pretty obvious restriction that could qualify you. But if you look at something that's a more essential business, such as manufacturing or even senior living, where there are restrictions on visitation or restrictions on group activities. If dining had to be moved to individual rooms, so there was less social interaction. And then families didn't feel as comfortable moving their loved ones into nursing facilities at that time because of the restrictions and the impact on the quality of life. Again, that could be a potential restriction that would qualify you. What we're looking for is a quote unquote safe harbor where a minimum of 10% of your business was impacted by governmental orders. If you tell me that I opted to close my business or I opted to social distance my employees, we did that for their safety. That's great. What we're looking for is, was there a governmental order in place? Whether or not you chose to comply with it is between you and your staff. But if there was a governmental order in place, that's what we're looking for to tie that story together. What was the governmental order? How did it impact you? What did you do about it? And if we can draw a 10% impact to either your revenue or your employee work hours, then that would show a nominal impact. The other great thing about these tests, it's an either or situation. So you don't have to meet revenue and also have been suspended. You can also qualify under both, meaning if you meet the revenue test in 2021 and you meet the suspension test in 2020, we can qualify you for both time periods with whatever test makes sense at that time. That's the long and short of it. There's obviously a little bit more to it. If you, there were changes to who was considered a large employer or a small employer. So if you feel like you didn't qualify because you were over 100 employees or over 500 employees, again, that's a common misconception. You are still eligible. There's just changes to how we qualify, what wages we can apply that credit to. Again, I already covered if you received a PPP loan, even if it was forgiven, that's not a disqualifier. If you are government funded, but your focus is higher education or anything healthcare related, you do still qualify. So any of your county and city hospital districts, a lot of times we hear that they don't feel like they qualify. The answer is yes, you definitely can. So my suggestion to everyone is, even if you've looked into the employee retention credit, even if you had your CPA or your payroll company tell you that you did not qualify at any given time, it's definitely worth a second look. I would say that the majority of my clients that I've served over the last year, probably 70% of them felt that they were ineligible and had already looked into this before talking to us. And there's just so many changes and so many misconceptions that it's worth a second look just to make sure you're not leaving a lot of money on the table. Speaking of money, the amount is up to $26,000 per eligible employee. So that's definitely a lot of money to be looking at. So I know that was a lot of information in a short amount of time. Does anyone have any questions?
I just switched my view real quick so I could scan the room. That is a lot of information. And my question was going to be, what does that credit look like if it was flat rates based on wages or whatnot? But up to $26,000 is significant.
It is significant. And the way that breaks down is what we're looking at is trying to find $10,000 in qualifying wages per employee in 2020 and $10,000 in qualifying wages per quarter per employee in 2021. And in 2020, you can claim up to 50% of that, so up to $5,000 per employee. In 2021, you can claim 70% of those wages, so up to $7,000 per quarter. So let's say that you have employees that make less than $40,000 a year, then obviously they're not making $10,000 in a quarter. That's okay. Whatever their qualified wages are for that quarter, we'll be looking at 70% of that number. So it's not an all or nothing credit. You can definitely take a partial credit based on what we can find that's eligible. It's also not based on your payroll taxes. So again, if you're a nonprofit and you're not paying payroll taxes, it's based on the wages that you're paying. It's not a loan. You don't have to pay it back. There's no restrictions on how you utilize the money. It is a tax refund. Once you file an amended 941 to receive that credit, we're just waiting on the IRS at this point to send the check, which can take 4 to 6 months right now. They're just as backed up as everybody else. But that's definitely what you're looking at. It looks like Ryan has a question.
Yeah, thank you, Krista. That's some fantastic information. Is there a website that we can send our business owners to check this out?
Absolutely. What I'll do is send, I'll put a link in the chat. Our business website, our firm's website is thinkllp.com. We have several resources on our website, including if there's a 30-minute webinar people could watch, a couple YouTube videos that explain some of the nuances, and then of course our brochure that goes into more questions that you can ask yourself around partial suspension, just to kind of get that conversation going, maybe with your operations department. So yeah, I'll drop that into the chat. And then besides that, there's just so many resources online. I would just make sure that if you come across something and you think that it's confusing or you think you might not qualify, keep digging, because there's been so many changes over the last few months. If it's outdated information, there may be something that changed.
Terrific. Well, we'll obviously be sure to gather that information for our chamber chatter and to put as resources on our website. But gosh, that was a lot of information, and you did such a thorough and clear way of communicating it. So I appreciate you doing that. Yeah, please do put your contact information and website in our chat as we move through our city and county officials. If there's any other questions you have for Krista at any point in time, anyone, go ahead and feel free to chime in. But for now, I just want to thank you so much for being here at such last minute notice.
All right, thank you so much.
You bet.